The Aussie market is looking weaker than the US. Short-term cycles are indicating that there is pressure from now into mid-March. And today we're going to look for some opportunities in the growth space on the ASX. Gary Glover's report is running us through it, and he's here to guide us through. Good morning, Gary. How are you?
Yeah, no, pretty good, Chris. Pretty good.
So,
I'm a bit on the sidelines at the moment here. We've had a pretty good pop here. Hit a bit of resistance there, particularly Aussie market. Australian market's definitely showing resistance at that sort of key technical levels there, and has definitely sort of had that downward kick there last week from that what I consider to be kind of an important level. So we're definitely not looking as strong as the US particularly the growth indices. They're still sort of hanging on here, showing a bit of strength, but still pretty choppy. So I still feel like it's going to be a bit of a building process there. Still feel like that we're still seeing plenty of movement, still choppiness in the market there, not sort of super trending market, I would say. And I'm hoping we'll just sort of wind back here a little bit, build another high low, and then sort of go again. But yeah, it's a bit of a big week for the markets really, because we've got the CPI on Wednesday, saying it's like midnight.
12:30, I think, tomorrow morning.
Yeah. So that's pretty important. It's sort of probably the first one where sort of there's a bit of disparity in views as well. So just some concern around some numbers out and previous numbers and the direction we're heading. So I think consensus is 6.2, which is down from the 6.5. So it will be important to sort of see inflation continuing to sort of cool. Still relatively high. There's still high numbers there. So just need to sort of see that sort of continuation and inflationary pressures sort of subside there. So it will be interesting there. So that's so maybe my cycle's telling me just that could cause a little bit of weakness there. But that if that number comes in quite a bit lower, then we know the market should go higher. If it's a little bit higher and not as weak, not heading down as much as everyone hoping for, then that'll be negative as well. So probably one of the more important ones. I saw a nice little tweet there this morning there talking about the market movement on the last 6 CPI numbers. There's been some big moves so on those days. So like up and down sort of 2 to 4, 3. I think there's like a 2, 3 and a 4% move some of those days. The last couple have been a little smaller. Maybe we'll start to take the edge off here, but this one seems to be, everyone's a bit more mixed on this one, whereas I think everyone's been sort of on the same fence going into the same view going into the last few. So
it could be a bit of a surprise for a fair few market participants.
Yeah, it could be. Yeah, it could be. Yeah.
Well, if you're talking about the market sort of easing and pulling back and looking at mid-March, if we look at this NASDAQ chart that you've got in this week's report, you've noted for quite some time now, we've been talking about the NASDAQ outperforming, say, the value indices, the Dow Jones and the Aussie as well. So it has been performing well, shot out of this range where we've got this sort of overhead resistance. What would you be looking for if it was to drift back into early March? Like, would it come back and sit on this support line, maybe not come down as far as this sort of low region here?
Yeah, so the two things I want to see there, Chris, is lower trading volumes. So I don't mind the market having a bit of a cool off or a bit of consolidation or a pullback here. But we want to sort of see less conviction in the trading volume there. So we can cool off here, we can pull back. We're seeing lighter volumes on that pullback. That's constructive. And secondly, just not anything too impulsive. So we want to see something a bit corrective, sort of take its time a bit here, overlap a bit here as well. So nothing impulsive or nothing in the high volume there. So if we sort of see a few strong days down and strong volumes, that's not ideal. That's what we don't want to see. So sometimes you've got to be patient in the market. There's just, you get your sort of phases where you're going to have a quick move, and then you're sort of going to have a bit of a breather or a bit of consolidation. So I mean, like, there's still some risk. I mean, this still got the cycle coming out of this October low. That's the key low for me, and that's I feel like that's already been proven to me. We've had a big enough move for some of these markets. That's the case here. So now it's sort of building here. The next sort of key level is that early March sort of timing. So I do find that that's the other sort of key timing I'm looking for this year. So just like a little small contraction there, just corrective sort of pull back into early March would be perfect there. And just there's a few signs in that. Some of the stocks are sort of looking that way, but yeah, we can go through that.
Well, on the S&P, is it pretty much the same boat? You've seen it break out of the range. It's come up. It hasn't come up to the same extent from the outperformance that we saw on the NASDAQ, but you're still looking for it to sort of come back slowly, not huge or heavy volume, just sort of corrective manner back into this range, sitting maybe above this low if possible, onto that support on what was a resistance line or the channel line, and then maybe get going again. Same story?
Yeah, very similar. I mean, all the bears were looking for it to hit that channel line and then roll over and go to a new low, and that obviously hasn't happened. So the market's kind of try and I think it's always a bit of a chess game. The market's always sort of trying to trick people and draw them in and get them to do the wrong thing at the wrong time here. So yeah, it's just I think we've sort of broken out there, had a decent move. Probably hit a bit of a technical zone around that 4,200. I think we'll pull back here, just getting a little tight here. Might hang around a bit longer. I mean, to me, the risk is still on the upside. That sounds funny saying that, but the cycles are still reasonably positive for this year. So I mean, I'm hopeful that we'll get a bit of a contraction here, a better opportunity to add some more longs in there. But the risk is still on to the upside to me. So yeah, which goes against, I know that's a sort of different opinion from a lot of people out there, but yeah, look, the cycles have been bang on here the last 12 to 18 months. So until I see price action, which is varying from that, I mean, I just let the market tell me what it's, wants to do. So far, the market is behaving in terms of the cycles. It's done everything in line with the cycles. The price action has mimicked those. It's the volumes have increased at the lows. They've they've been pretty strong on the way up, and then they've contracted with a lot of volumes. So so far the price action is constructive here. So until we see a variance in that price action there, Chris, we've just got to maintain that view. So, but yeah, hopefully we'll get a little bit of a pullback here, and yeah, just a slightly better entry level for something. But it should build. I mean, that 2002, 2003, which came after the last growth crunch, that did take time to build. It just does. When you're there's a lot of stocks there were down 60, 70, 80%. So that damage, it does take a little while to build. And we're seeing some pretty decent moves, and some of the growth stocks at the moment, they're having a good run, but then they're getting equally whacked again on the downside, and that can be a basing process as well. So go up hard, come back, get a higher low, and then go up again hard, come back, get another high low. So it can be pretty choppy. That can be a basing pattern there. I think the 02, 03 market was a bit like that. So key there is just to keep building here, getting a few high lows, just not seeing too much aggressive selling here on the downside there, and just a building process there is what I'm thinking we should see.
Well, if we have a look at the Aussie, there are some concerning words in your report, which is the distribution word. Now, it looks notably different from the US. We are coming up against this resistance line, and we got pretty close, as your report shows, just recently. So 7565, which is higher than the other one. So we got up there. This distribution, what is it, and why is it concerning at this part of the chart?
I was actually more concerned about it going to a new high, Chris, because I think that, sounds funny saying that, but if it had gone to a new high and failed, that's actually more negative than staying under the previous high and failing there. Because that's when you can get dramatic moves, and that can be a little, we saw in that 02 I think from 2000 or 2003, the market kept broadening out, kept going to margin new high, margin new low. But that caused some really volatile, some really sharp moves. We probably don't. That's not what we want to see, really. That's too dangerous to trade in. We'd actually probably like to see a pullback under the high. Just absorb some pressure here. We'll get some sectors will be under pressure there, and then we can build again. So hopefully, what we'll see here is a bit of sector rotation. So start to see some of the hot sectors. So I think things like the financials have been pretty hot. materials have been pretty hot as well. They're definitely in a corrective process there. We're seeing some of those energy sort of coal stocks starting to come off. I think we might sort of see some of those in materials, iron ore as well. If they can kind of rotate down and the market can do a bit more of the lifting and hold the index, the index doesn't come up too much, and some newer sectors emerge, but that'll be constructive longer term here. But I'm still a little nervous about our weighting in commodities and resources in Australia here. It's just going through, I've gone through the IPO list the last couple of years. So I looked at all the IPOs in 22 and 21. It's just a hell of a lot of resource companies that have come to market here in that period. So it's just that, the resource weighting is it's really increased here in recent years. Whereas in the States, you've got a lot more tech offerings and more industrial offerings. We just sort of had less there. So I was hoping to see a lot more new industrials coming through on those IPO lists for the last 12 to 24 months. I'm just not seeing that there. That's a little bit of a concern to me, because we can be a little bit of a one-trick pony here in Australia, which can put our market at risk if that one trick has a bad period.
That is definitely concerning, and good to see that you're looking at the depth of those IPOs, the spread across the different sectors, because as you've been saying in your report, it's really important to look at those because that's where we can get an indication of new leaders. But if they're in a downward-facing segment of the market, that doesn't bode well for our indices. But if we move over to have a look just quickly at the Dow Jones before we jump into the trading shares, this one's bit more like the Aussie in the sense that it's been trading sideways, but much more in that sideways pattern than the S&P 500 and the NASDAQ. Are you concerned about this rotation? Like, it doesn't have as many commodities as we do, but what are you seeing as sort of the concern here?
Yeah, that's kind of your old sort of value sort of stuff there. So it definitely has sort of cooled there. Obviously, the money has gone into growth here after we started seeing some lower sort of CPI numbers. So, if that lower CPI numbers do continue, then the money will continue to go to growth. If that CPI figure does jump up a little bit, we might jump back into value again, because obviously you look at our looking back in history, those sort of safer sort of stocks, sort of the high, value shares that sort of typically, lower PE, sort of high yielding stocks, they tend to sort of do well in high inflationary environments. So, yeah, just having a bit of a breather here. I still think it'll probably, just looks a little tired here. So I'd love to see just a little bit of a slow ease back here, back into March, and put a little ABC in there, and then start to build again. That's just, Rome wasn't built in a day. Just markets do take time to actually, to build. And unfortunately, there's, if you go through and look at the stocks and the market there, they don't always go up. There are periods of sort of sideways, and there are periods of going down, and there's sort of periods of, of sort of nothingness sometimes where you're just sort of in a grind here. So I just think we might just go through a bit of a consolidation period here. I still think that lasts a bit longer. I would just love to see personally a little bit more weakness back in here. Just feels like it's a little tight here, just sort of, just sort of cooling off here. But yeah, look, the price action's constructive. I noticed the Dow had a nice positive move last night. So, it's actually looking like it might even pop up the upside. So there's, I say the risk is to the upside, in my opinion, still. So, I think the CPI read will be really important here tonight.
Okay. Well, looking at the trading shares you've picked out for this week on the ASX, you've picked up Appen. This is one that we looked at last Friday and came out of the 30/30 list. You were looking at the chart there. And then we also did a video a little later on the top 6 ASX listed companies that are in the AI and machine learning space. Appen was in that report too. So you've pulled out the weekly chart here, and that's a really dramatically different picture to what we've been looking at on the shorter term. So this weekly, why is it catching your eye, and what are you seeing the potential trade here?
Yes, I mean, I just, look, obviously that AI sector is the one that everyone's been talking about here the last couple of weeks, and the ChatGPT is obviously the product which is sort of catching everyone's attention there. So potentially this is, if that CPI does continue to cool off, and then there's a movement back into growth, then we're looking for sort of potentially sort of new segments or hot segments, which which could which a market will be looking towards. So definitely AI is that's already catching on in the States. Everyone's talking about that. So I noticed that Appen, which is definitely in that AI space there, almost forgotten while everything else was taking off. But then I think late last week, that the stock did get some a follow, and there was actually some pretty big volume pushing through. And that's to me, that's like an early sign of accumulation going on. It did have an update yesterday. Had I think the revenue line was higher, but the EBIT line was lower. But the negative there was a little write down, which probably the market wasn't expecting there. So it's got a bit of a whack there yesterday. So it has come back here, but I still think this is one to keep an eye on here. It's just in the right space here. If that CPI continues to cool here, I just think it's a sector to watch. So I'll be watching. I know it had a big day down yesterday in big volume, which is not what you want to see, but I haven't given it up yet that the stock might actually hold here. If it can keep building, you can get this volatile. If you go back to 02, 03 there, you some of the stocks were quite volatile off the lows. They were just quite choppy, and they moved back here. That's why you got to be a bit patient here. It's a bit of a building process here. So, you got to be careful, following stocks here that have run a bit hot here, because they'll snap back here. And we're seeing that with some of the biggers as well. We've seen it with Seek, Domino's. I've had some decent moves and some sharp pullbacks as well. So. I just think this one's interesting. I think I'm going to watch this one closely here in the next week or two, because I do like that space. I think Appen is a bit of a forgotten stock in that space. It's had a massive decline there. Oftentimes I'm wary of stocks that have had big declines like that, because then you're fighting all the selling pressure in here along the way here. But this is one that I think does, can really get going. I think you were saying last week, the Amazon went from 106 down to, I think it's about $6 there. So, it lost about 94% of its share price throughout that 2000, 2002 period. So really nasty decline there, but did snap back here. So if there's the makings of a good company behind it here, and that sector can get going again, there's some legs here. This is just one sector here, I think, that the market could actually potentially get excited about 2023. And that's, just maybe looking forward a little bit. Could be wrong here. Gotta definitely use some risk management here. I haven't actually entered here for clients here. I'm just waiting patiently, but this is definitely one on my radar at the moment.
Well, another one that's in your report is also PAR, so the pharmaceutical side of things. You have talked about this VCP in previous reports as well. You've shown that it's done it before, and it looks like it's setting it up again. So what's the next thing that you want to see from PAR?
Yeah, I think apart from energy and biotech were the two leading sectors currently out of the October low for the S4 for the US market. So they've been really the leaders of the rally here. So we've seen plenty of biotechs in Australia here. We've seen Clinuvel, Polynovo, PME. We've just seen quite a few. The big biotechs here really have a pretty big move, pretty big rally there. And when the market was putting in lows in October, they were building high lows then, and they really got going here. And this is the same case here. We actually got a high low for Paradigm here, which is like a repurposed drug there. So it's already approved drug, obviously getting repurposed for another use there. So slightly less risky in my view in terms of the risky segment that biotech is. But I love that price contraction there. It's just really been flashing around a bit there, but each pullback's gotten shallower and shallower and shallower. And it's very reminiscent of the setup there in that 2019, and then some volume came in. It really got going there, and there is with Paradigm, there's actually quite a few catalysts there in 23. So saw Ben Clark talking about it actually on AusBiz a couple of days ago about some of the things that got unfolding here in 2023. So there's definitely some catalysts there. I looked through the report as well. Definitely some key things coming forward here. And just think the sector has been held back just because of COVID there. Not a lot could get done in that period. So now that health space and biotech, medical is opening up. Yeah, it's just a sector to really keep a close eye on here. I just think there's upside. it's a pretty good risk reward here, I think. So I have sort of personally got a little small position here. But yeah, so I haven't really pulled the trigger for clients here, but definitely one that I'm keeping a close eye on. If I can just sort of see a bit more volume come in, yeah, this is definitely one that's, you know, just a good risk reward here. I mean, if you could have kept your stops sort of somewhere under the last low here, and it does break out, there's a potentially large move there. So yeah, good risk reward. But I would be, you know, starting very small if I was looking at the stock here.
Well, if we keep in the same space, we'll jump over Domino's and come back to it. You've got Clinuvel that you've mentioned. This is one that we've covered so many times in the 30-30 report throughout this tearing movement here. Just that quarterly momentum is just through the roof.
Yeah.
And one that you noted and said this is a great example of how leaders lead and how so many times markets can be at the forefront of the leaders much longer than any of us expect. But in recent times, they've turned the corner and come back down. So is this what's catching your eye here, or are you seeing a trade building here?
Yeah, so I've sort of been reading a few books here the last couple of weeks. I was sort of reading John Boik, Monster Stocks on the weekend, just going through going through all the stronger stocks historically, and obviously coming out of bear markets, how they do it, what they, obviously they lead out of, but basically they generally sort of show strength. Like when the market's making a low, they're making a high low, and then really as the sort of market gets, comes out of that low, they're really flying. So they're, the gains, the relative strength there is, far superior to everything else in the market there. That's like Clinuvel's been definitely probably one of the strongest stocks out of that October low, made a high low. That stage we were basically making our second or third high low. And then it really got going through that sort of December through January period. Had a really, really strong move there. So from a relative strength point of view, would have been in the top stocks in the market there. So it's shown real strength out of the low here. Made high lows, so built a base. So pretty. So if you go back and look at the top stocks, oftentimes when they sort of do make the sort of first big move there, they will pull back, but they oftentimes they'll come back to that 50-day average. Moving average there, Chris. So that's the sort of red line there. So we sort of come back there. That sort of coincides with the old high as well. So, if we're going to build again, we should sort of try and build above, build on top of that old high as well. So just interesting, the 50-day moving average and the old high are at the same level. And this is a normal event for the leading stocks. They really, they get a bit ahead of themselves. They lead early and they really fire up. When they pull back, they don't often sort of do like a slow decline there. A lot of them will come back to the 50-day moving average pretty quick, just because people get wound up here and get drawn in late, and then they're all panicking out again, and then we build again. So this is one I'll be watching pretty closely again here over the next couple of weeks. I'm hoping this will just sort of congest and hold here. Maybe the market will pull back a little bit as well, and it'll show some relative strength again, holding around that 50-day moving average there. But yeah, so a bit of a theme here today. Just stocks that I think could be interesting in 2023. I think hopefully we'll pull back here a little bit and give us a good setup here in the next few weeks there. And Domino's is another one as well. I mean, it has led here, been one of the sort of stronger performers. I think Seek's been pretty, I think we bought Seek and Domino's out of that low there just for a bit of beta. They've definitely been some of the stronger ones there. But what we've sort of got the look of like a inverse sort of head and shoulders pattern there now. So we've sort of gone back up to that shoulder. So a bit like the fold back theory or, inverse head and shoulders. So oftentimes when markets sort of do find a key low, they'll come out of that low the same way it came into it. So sort of follow the same path out. So it's interesting, we've found a bit of resistance at that old high there. Started to pull back here. So yeah, I'd love to see this just sort of congest back here. Doesn't have to come all the way back down to the left shoulder. Just needs to sort of take shape here and use up a bit of time and come back maybe near it or 2/3 of the way here. So yeah, something like that. So just want to sort of see, a bit of a congestion there for the stock here. But again, it's another one I'm monitoring here, just sort of looking at the kind of the leadership group out of the last lows, and then we should be sort of starting to establish a couple of some high lows or second high low from there. So don't be too nervous about the volatility here. That's quite normal. And they can come back quite deep as well, which is sort of, might be a little scary to sort of see that. But again, that's normal as well. So, but yeah, that's sort of why we're sort of building slowly here. We sort of can't go, you know, if you look at all the best traders in the States at the moment, they're doing something similar. They're still trading small here. There's still, the pullbacks are still pretty sharp here. So you got to be careful not to go all in here, because you can get burnt pretty hard here. So just the key there is just to sort of build slowly here, sort of small, and then, yeah, hopefully sort of once we get through March, then if we do get a pullback there and come, you know, some safer levels to entry, then we can sort of start to open the shoulders a little bit more. But just got to trade a little bit cautiously here for the next 2 to 3 weeks, I think.
Well, that's a good way to lead into a cautious period. And we've also got reporting season, as you noted, a lot of US data coming out this week. I think 12 Fed chair representatives will be speaking over the next week or two. So a lot of volatility possibly coming from any of those news announcements. And we've got a nice shortlist to watch to look for opportunities to trade. So at that point, we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Now, Gary's mentioned a few of those trading strategies, as well as the fold-back technique that he's talking about for Domino's Pizza on this chart here, where it's sort of the inverse head and shoulders. There's a link to the whole series of those, including volatility contraction patterns, and where Gary's looked at how the inflation was treated and the markets responded in the 40s and 70s. That whole playlist is on the right-hand side, along with this Friday report that Gary's also mentioned on the 30-30 list that we go through and find these top momentum companies. The Clinuvel has also been a strong performer in, and Appen was surfaced last week. Finally, on the left-hand side is Gary's Twitter handle if you'd want to follow him there.